3 weeks ago, we saw retail enter Bitcoin and cryptocurrencies. Now, from this point, I think the markets have begun to change, essentially changing to the old beginning of the end. We're in this last stage of the cycle. And within that last stage, there are many things that we generally see repeat, but those that don't see it repeat are doomed to fail. We've seen this in every single cycle previously, and I've also been there. Every single cycle, if it is your first, then you're going to experience this until you learn the lessons of the market. Hopefully, I can help fast track that, give you these lessons here. And in doing so, hopefully you hit the like and subscribe. But at the same time, I'm also learning for myself. That's why I like to do these videos almost every single day, apart from the surfing. And hopefully you're also gaining from it. So let's dive into some of the lessons for today. And I'll do a market update as well and show you how these lessons apply to the market in the current time frame, and then how we can apply them for the future as well. So history is repeating. Most are not ready for it. I was at this stage before, and I'm sure I'll be there again as I start to learn new things about the market. It's always evolving, and you can never know everything about the market. At least that's what I've learned over the last 20 years since I first started investing in real estate back in 2006. So 19 years, my apologies. 3 things that you must be able to do to be a successful investor and trader. Of course, there are a lot more, but I'm going to begin with these few, and we just build upon it with every single video. So if you have been around, you know the deal. We've done many of these sorts of lessons and then apply it to the market, and then hopefully give you the understanding that we can see these play out in real time, as I think some of these are doing right now in the case of Bitcoin and of course the cryptocurrencies. And we can see a lot of this beginning to happen right now. I'll also cover the stock markets as well, as we see it in all of the markets. Therefore, what we're learning can be applied basically across all of financial markets. So the first thing I want to look at is the duality. The first thing, duality, and then looking at breaking it down to long-term and short-term. So in some instances, we'll see the short-term looking like it could go down, but overall the structure is still macro bullish. That should be a pretty simple one to get our head around, but the main problem that I've seen stem out there is that many don't know where the pivot point could be. And depending on your analysis that you like to use, the pivot point could be many different reasons and different areas. And that's why I think it's important to stick with one style of analysis until you feel very competent in that analysis. I've chosen Gann. Gann has worked for over 100 years since he invented it, early 1900s, and it continues to do so because it's based on human emotion and charting that human emotion. And we know human emotions have never changed. So taking a look at some of these pivot points, short-term and long-term, if you can identify the short-term pivot points, then you could expect that, well, if we break those pivot points, we can expect the market to go down. And if we go down, where do the next levels come in? Well, then we look for some significant macro turning points, maybe a medium term, a long term. It's going to have to come down to what you're looking for. But in terms of the short term, what I'm seeing here is that, well, for 19 days since retail arrived here, roughly the 10th, 11th of July, we've gone nowhere. And this has happened many, many times before. Retail arrived at these areas. Previous videos I've discussed why I think retail has arrived at those points, and we've identified one, extreme greed, basically the market sentiment. We've looked at Bitcoin ETF flows coming into the market, usually rising to some new fresh high, if not an all-time high of Bitcoin ETF net inflows for those periods. And along with that, also things like the Google search volumes, they start to spike at that time. Now, it can hold at these levels for a period of time, like we saw back in December, like we see in January, and like we're seeing right now, 19 days at these highs after we see a spike in all of those exact 3 things. Each of those occasions, yes, we did see a correction in the market, but we haven't necessarily seen the macro break down. So we're still holding up relatively well. The macro hasn't broken down. I'd be concerned if we did begin to see breakdowns of around that high 90s to around 100. That's where those next key levels are, so mid 90s to around that 100 level, I would be very concerned there. Otherwise, I think it could just be a shallow correction, and I'll get to why in just a moment with a few of the other charts here, like USDT dominance and the Bitcoin dominance rising at this point. First thing is the duality. So understanding that there is a difference between the short term and the long term. Most people we know look at only the short term. They think they're looking at the long term, but they try to make calls for the long term off a short term chart. So they'll see 1 or 2 days in the red, not necessarily down days, but essentially just red. And they'll start to call that, well, this could be the top here. Basically, we've just seen the top. That's not how tops are called, at least not in my experience. It's going to take more of a breakdown to confirm that the macro is going to break down, that the long-term charts are going to break down. So short term, you might see it on an hourly, 4-hourly, even a daily, and then yes, the prices do fall, but long-term prices are still being supported at critical long-term levels. Now, just as a side note there, in some cases, these longer-term levels can break, but then quickly bounce back above and get a longer-term close, like a monthly close. But you're going to have to forego some of those profits or time. And more importantly here, you'd have to leave it till the end of the month to find out, oh, we're going to get a close above those levels. But I digress. We're looking at just the short term here and the long term there, understanding the two differences. So I move on from duality. If you can split those two up, sometimes we're talking about short term, but the long term hasn't broken. And you may know, if you've been following the channel, my long term view is that the markets are still going higher. 18-year cycle has shown that as well. And I've even got some updated info on that for you. Now, number 2 is what I've called here, at least, is the rejection. Rejecting two things. There can be so many more, but let's just keep it simple. These two came to mind this morning as I was going through some analysis. One is mass media, and 2 is overthinking. I'll make it really, really simple. Mass media. I have a nice post as I go through all of the links here. We saw this on May 2nd. So May 2nd is right there. This is where a lot of these came out. They're probably coming out all the way up, but this is the post here from Heisenberg here on X, just to give us a recap of the news. Goldman Sachs, Wells Fargo, Morgan Stanley, JP Morgan, Bank of America, sell the rebound as the market's coming up. Remember where this was back here. The market's now up 13% in the case of Bitcoin. 2nd of May, somewhere around here, and the market's up about 20% from the point where these guys are telling you to sell. Retesting the low end of 5,000 is feasible. Of course, the S&P 500 was not there. It was sitting here around 5.7, so they thought it was going to come all the way back to the lows. Nope. JP Morgan, S&P falling to 4,000, worst case scenario, nowhere near. Bank of America, sell the rebound, so any sort of rips, sell those off. Now, yeah, there are a lot of influencers, financial influencers online, but this is the best point, I think. Never forget, a random Twitter person could be wrong. So, sure, here I am. I could be wrong. But these guys manage hundreds of billions. That's different. I think that is very different. These guys are supposed to know what's going on, and you often see that someone who's not attached to their job at a bank can get a much clearer level head about the markets. Because at the end of the day, mass media, from what I've seen, they have to essentially do what everyone else is thinking and feeling. Otherwise, they look like an idiot, and they might not get their bonuses, or they might not be thought of as very intelligent if they're not thinking like everyone else, which kind of goes against the point, right? You got to be looking at how this is all coming together and obviously make your own decisions. And that leads me to the second point, overthinking. I've seen it now for years here on the channel. I've obviously been doing videos now. People have found videos back to 2017. So you could call it somewhere around 8 years at least for this financial information. And the thing I see often is then getting into the overthinking where people think, well, the markets are going to go up, but what about this that you haven't thought of, which could make it go down? And then if that happens, what about if you haven't thought about X or Y topic that could make it go up? But then in reversing that, it could be going down again. So the overthinking about where the market could go, I think leads to more failures as well. And that's what I've got here. I think you must be able to do these things to be a successful investor or trader. So try not to overthink. This comes from direct experience for me in 2017 when I was thinking about this with altcoins and going, oh, why do they keep going up? There's nothing to them. They should be coming down at this point. And it didn't. They just kept going up because there really wasn't anything else to it apart from the cycle's up, people are bullish, and people go nuts about altcoins. So you just have to put it aside and just go, shit, it's still up. Just keep running with it. So they're the two there with rejecting that sort of thought pattern and then creating your own that you know that works. The way to get there, you have to journal. You have to record what you thought about the day before in order to get to that place because it's the only way you'll be able to reflect on what you've been doing. And again, obviously coming from experience here, that is how I've been able to continue to grow and hopefully improve. Daily videos are a fantastic help for that as well. And finally, a big one here, patience and confirmation. So you get to this mass media, you get to the overthinking if you can get through it. So how do you define and measure these sorts of outcomes for yourself? I think you need confirmation. You need confirmation of, is the trend going in the direction that I think it is? And have I not overthought what this concept that I've come up with? So being patient to wait for confirmations, I think has been an absolute game changer for me. A lot of people aren't patient. They don't wait for any sort of confirmation, or potentially, and it's happened to me as well, the confirmation that I've used is not useful. It doesn't work. And so you think it works and you won't know until you go back and reflect on your work if it has worked or it hasn't. You go, or I'm going to use this signal, I'm going to use it and test it over multiple different trades. It could be long-term, short-term. And if these trades are not working, well, maybe the confirmation signal that I'm using is not actually a good confirmation signal. And you have to go back to the drawing board and fix that up. This stuff takes time and there is a lot of work that needs to be done, but it's not impossible. It's not impossible. The bonus one here stems on from, say, number 3 here with the patience and the confirmation, being right and wrong. Again, I've obviously been on social media for so long. A lot of people think it's super important to be right all the time. And something I just recently read today is that, and this was from Market Wizards. If you've read the Market Wizards book, the new one, Unknown Market Wizards by Jack Schwager, one of the traders in there said, if you never take profits, then you're assuming that your position is going to be 100% right. That is just a bit of a mind blow. You think your position is going to be 100% right. Look, I guess Michael Saylor could be put into that boat where he thinks his position is going to be long and long forever. But if you've been around long enough in the markets, that is not the case. Nothing goes up forever, just like it could go down forever and basically go to zero. So I retract that. But essentially, being right and wrong is not the game you want to play. It's just about making money, taking those trades, having patience, knowing that you will be wrong. You have to be wrong. That's just how the markets work. You're never going to get every single trade to the upside. So I thought it was a good idea to mention these. Sure, it went a little bit longer than I thought, but if you find value from it, let me know in the comments and obviously hit that like button as well. I get to see whether you've enjoyed it there. So that takes me to the analysis for today. And the short term and the long term, I guess, is the big one that I want to look at here. And of course, patience, confirmation, rejecting the mass media, that's an easy one. And we're not trying to be right or wrong. We're just trying to stay with the trend. So in the short term, I think that we may have a bit of a pullback here, but nothing that is going to break the macro structure of the markets thus far. We obviously have our 50% levels that come somewhere in the middle here, around 110, 111. That lines up with the previous highs. Absolutely okay. And then the invalidation to this is if the market does begin to push higher and break these highs with strong volume, conviction, so on and so forth. If that is the case and we actually continue on with this trend in a strong fashion, we would need to see those things. I think the volume and so on. But we've seen this before where we had retail coming in. We had a few of these indicators like the sentiment beginning to run out here into extreme greed after a prolonged period of consolidation and then a push higher, which then just led to a longer time for the market or the market participants and the market sentiment to break down. So what does that mean? Well, we get to this extreme greed. You can see the dark green here, market up here. Took a bit of time. It tested the yellow, which is neutral. That took about 53 days, that's 2 months. Ran up again into extreme greed when Trump was inaugurated, 60 days, there's 2 months, and then took some more time to break down to get to these extreme fear points, roughly 3 months later from the extreme greed down to the extreme fear. And then if we extend that out to run through the cycle of human psychology and emotion to get to that next extreme fear, kind of runs out to about 140 days. And like you'll see with the rest of these numbers, they sit around 140, 150, generally speaking. There are a few that go out to 170, 180 days. So that's 6 months. That's why I'm looking at this period of being 4 to 5 months for human psychology in the market to cycle between the lows to the highs of their sentiment reading. So we're basically there now at 154. So if we do push higher and we see something like this move where it pushes higher then closes back under, I'd suspect that we'd then have to go on the decline just for a little bit, maybe a little less because of where we sit in the overall cycle. But it would need time to relax and cool off. 2021 also did the same thing. You can see in January when we had this big pump up, there was still a decline. We don't need to worry about the percentages here because we're at much, much higher prices, but it's the time and the market sentiment. Extreme greed flushed out to fear, took some time again, ran up, and then the sentiment began to die off. That was towards those highs. So that's what I'm looking at next here for Bitcoin. I think if we can get this little push higher to the next resistance levels, hopefully somewhere around that mid-30s, mid-130s, I should say, that would take us to, I think it was an extension of the move. It'll be my next price targets as well. And then we have a cool off, which then sets us a little bit further away from the 7-year resistance line. So short-term, long-term still up, short-term undecided. I'm beginning to lean a little bit more to the bearish side, even if there is a fake out to the upside. I think just this time frame here is beginning to look a little bit exhausted, although you can see that 175, you still have another few weeks. It could still hold out here another few weeks, which is what we've seen in the past, especially as it runs up into some pretty strong moves. 177 days, 172 days. This is just the market sentiment from these fears to the extreme greeds in those rough time frames. Now it's a new week and we have more new reports coming your way, beginning with the economic report. Link is in the top of the video description. It'll be followed by the altcoin report and Bitcoin report. Along with that, you'll also get access to the free Discord where you can check out TIA updates, exclusive updates that Michael and I are posting here, all for free. You can also check out the trading results from our members, short-term and longer-term, and then also review what they're saying about TIA Premium. That's all with the link in the top of the video description. This has also started to cool off, which generally coincides with a slowdown in the price action. And when it picks up, we see an uptick in the price action. That could mean a severe drop or a severe or a significant move up, right? Because people are searching for these words when there is volatility. Right now, there is no volatility, and the words are not being searched as much. Crypto and Bitcoin happens every single time. Altcoins have done the same, peaked out at roughly 20th, 21st, and we've been down now for just over a week. So again, lack of interest has now been followed by lower prices. The exchange volume has also continued to drop off here, but again, we got higher highs on the exchange volume, and here we go for hopefully finding a higher low, so that we continue to see more and more activity come into the space. So as I talked about in the intro, the dualities here, looking at the short term and the long term, understanding where the short term's at, but the long term hasn't changed any structure here. The short term seems to be showing signs that the market wants to slow down. Maybe there's a little bit of a spike, but I just see that as if it happens though, I see it as a short-term fake out. We're seeing it with Bitcoin ETF inflows, the net inflows here. Again, the biggest spike on ETF flows coming in. Here's your big green bar right here. Bitcoin, 10th of July. You've heard me talk about 10th and 11th many, many times before. Spiked up there, and now the price has basically gone nowhere. It's sitting at whatever it was, 116,000, currently at 117,000. Oh, that was another good quick data point here that I should mention. When I've seen these retail spike areas, the market, in the case of Bitcoin, generally hasn't moved much more than 10 to 20% from that point. Case in point, look at the 10th of July, the low to the high, 11.5%. Of course, we don't know the exact time that every single retail trader decided to bust into the market, but we can see the 10th of July was the day that it broke through and closed above for the first time in history above that 7-year resistance level. So I think that's quite a significant move on that day. And the 11th, we also saw a very big uptick in retail watching crypto content online. Now, the USDT dominance has picked up a little bit this morning, meaning that we're seeing more selling going on in Bitcoin and cryptos. Therefore, it's going back to the stable coins. It has moved up to around 4.3%. So this could be that short-term move that we've been discussing, that we see a bit of a sell-off here for Bitcoin and altcoins, but we've got a bit of a resistance level here forming at around 4.4%. So it doesn't necessarily mean it's going to be a huge correction, but probably a slight correction nonetheless. If USDT continues to break higher, there's still some more resistance levels above, around 4.6 to 4.8%. That's this red line, which is the all-time support level, which it has broken under now for basically the second time. This I would call the first time, and now that was a support, and it's broken through here for the second time. So it could come up, test, come back down, and hopefully break the 3.7, which would then send things going absolutely wild. But while the USDT dominance remains here or higher, we're not going to see much more happening with the crypto markets. So we need to find some sort of rejection over the coming days to then have a bit more of a failure and fall here for USDT. We're also seeing that with the with the Bitcoin dominance, where that has also continued or begun to rise again, and it has not created an overbalance in time and price from a larger correction that we saw back, I think, earlier this year or late last year. Now, I made a few predictions at the beginning of the year regarding ETH and Bitcoin. I think ETH will still outperform Bitcoin in 2025. It does need to get to the next level of 0.053. I posted that on X, so go and check that out. I've got a link in the video description for X. But not to make this video go too long, ETH BTC, I think, will close a year higher, and that's on the verge at the moment, but we still have another 5 months to go. And this cycle, I don't believe ETH will break the major 50%. It's roughly around 8.5 to 9%, which is what this number is here, of the ETH BTC value, basically, 9% of Bitcoin's value. Now, a couple of other things that we've been following: real estate to finish higher, interest rates, I think, will rise, if not end of this year, early in 2026. They could maybe have to go up again. Either way, before the end of the cycle, I believe they will have to go higher. We haven't seen anything change yet on the interest rates, and it seems like they again remain at 4.5%. This is coming up in a couple of days here, 1.5 days. Trump believes that the Fed is going to lower interest rates. Maybe they do, but it didn't seem like there was going to be anything coming out of that meeting that Jerome Powell said. That it didn't seem like Jerome Powell was going to drop the rates. I think it's just Trump trying to get on his good side again. So interest rates are still paused here. Maybe they do have a slight correction, but I don't think it's going to get the corrections that the rest of the market believed there was going to be, things under 3%. And that has continued to drive, or has it? But home prices have continued to drive higher, hitting new record highs, all flowing through from the 18-year cycle. That is exactly what we've been talking about for years on the channel. Almost no one else has been looking at it this way. Most people have expected house prices to fall. We've said the opposite for all of these years. I'd watch out when people think that there is no chance of house prices falling. That could be where things go a little bit crazy. But at the moment, real estate, US, Australia in particular, are finishing higher, and the interest rates have basically remained where they were. So interest rates really didn't have any sort of impact on house prices, at least that's what the US calls them. Essentially, it's land going up in value. Margin debt has continued higher here, and this is one of those things that people love to sound alarm bells with, but I don't think it's going to be anything too concerning yet. You can see in 2000, the 1999 dot-com boom bubble before the significant bust ran up pretty hard. This is only just breaking the previous highs, and prior to that, it just broke the previous highs before coming down and testing it. So essentially, the margin debt got flushed out at that time. Whereas in this move, you can see this huge rally up to the peaks. You don't see much flush out of the margin debt. Does it come back and test some of those previous highs? Maybe once so here, but then it just goes on a crazy streak into a high. And we didn't get any sort of retest, like flushing out of that margin like we see with Bitcoin and cryptos. When the leverage gets too out of hand, we see massive shorts liquidated or longs liquidated. In the case of 1999, it just ran up hard and fast before a huge flush out. Then ran up again for the peak of the cycle, broke the highs, and just kept running again. Big flush out, and then started to climb its way back. So we've seen a flush out already, and we're only just breaking into new, fresh highs for margin debt. So this could go a lot further, of course, in my opinion. And this chart here, looking at the recession, doesn't seem like we've got that recession that the SARM indicator was referring to. And I remember covering this at the time, where the person who covers SARM indicator, I forget the name now, but they had mentioned that when this went off last year, they thought it was not going to bring on a recession due to a few other factors. And they were right. It didn't bring on a recession. So the SARM indicator that basically coincides with every single recession in history didn't happen this time. You might say, well, if there is a recession in a year or two, well, yeah, of course, the recession followed, but how long are you going to give that between the signal and the recession going off before you say it's invalidated? I think by this stage, it's invalidated. We're up to 11 months. As we click over to August 2025, it's going to be 12 months. And you can see from each of these previous occasions, the recession started 4 months prior, 2 months, 5 months, 3 months, 8, yada, yada, yada. And this time, nothing. Nothing at all. The S&P 500 hit a new, fresh all-time high. Did have a slightly lower close, but it's basically been tracking each of the cycles that we're following here. The 5-year, that's the 20-year looking all right with a bit of a pullback into quarter 3. And the 5-year also having a pullback here, late quarter 3, early quarter 4. Both finished the year quite strong, running up into the end of the year. So pretty well on track there with the S&P 500. Another reason why I don't think that we're going to see any sort of major collapse yet for BTC. Generally, when you've got the S&P 500 hitting new fresh highs and running a pretty strong bull market, like we've pointed out and shown before on the channel, you typically see Bitcoin also follow suit. And you could argue that maybe it's the money supply doing that. Whatever the case is, it's all running higher, and there has not been a breakdown of that bullish structure. So here's ETH BTC. It has clocked up 0.032. I think we've got a bit of room to run to get to 4%. That would be the next resistance levels, and then up to around 5 to 5.5. If we break 5.5, that would be our overbalance in time and price. So the largest rally we've seen in the bear market, this multi-year bear market, if it breaks this level, that would mean that we're seeing more buyers step in than sellers for the ETH BTC pairing, which could send ETH even higher, providing Bitcoin is also in a bull market. If Bitcoin's price is tanking, yet the ETH BTC price is going up, it doesn't necessarily mean that ETH USD is going to go up. It just means that it is stronger than Bitcoin at that time. So providing we are in a Bitcoin bull market and ETH breaks this level here, 5.3 to 5.5, that could be a good sign that you're going to see ETH go to some of those crazy figures. Otherwise, well, we just have to take what the market gives us. And at the moment, it's only given us 3,800 with another rejection here, just short of $4,000 like it has done each of these previous times. So let's look out for any sort of signal that we saw towards these peaks. They were the 3 bars down, which then led to quite severe corrections overall. XRP is also failing now underneath the previous old all-time high at roughly 330 to 340. Not a great sign, but ideally it just continues to consolidate above 280, 50% level. And last line of support, I don't really want to see it go much lower than 260 and then take off. Now I've covered a long-term chart here for XRP as well. So on the monthly chart, we can see that it's done basically 13 months, 12 months, 14 months. It does these repeating time frames. And as we come into August, that takes us to 13 months. So we hit August, that'll be 13 months. We're getting very close to the end of these time frames for XRP. So I'm very much on the lookout here. It can shoot a lot higher. That's not telling you that the price is going to be stuck here, but it's telling you that time is running out, especially in the case of XRP, which has basically done this thing throughout its entire history. Hit the like, subscribe to the channel, especially if you're new. I'll see you guys back here at the next video, and drop me a book emoji if you enjoy these little educational pieces. And if you want more of it, you want to structure your plans, TI Premium, link is in the video description. All right, guys, I'll see you back at the next video. Till then, take care and peace out.